It's 5 minutes past the hour, and I think for the benefit of those who bothered to join on time, it's only fair for us to start. So I'd like to say again, good morning, everyone. Thank you so much for joining us today again for another session on agribusiness. Today, we are going to discuss how to access non-interest financing for your agribusiness exports. So as you all know, iProduce is a virtual agribusiness hub that tries to bring all the players in the agribusiness, from the agribusiness producers to the buyers of the produce, that's the aggregators, the processors, transporters, the logistics suppliers, government, very, very important, the policymakers, and the agencies that actually implement the policies, and also the financiers, which are both the banks and also equity providers as investors. So what we're trying to do is to create an ecosystem so that people can get all the information they require on one platform, rather than looking everywhere to source info. We provide services aside from training, which we're having weekly, fortnightly meetings. Hopefully we'll increase this weekly meetings. We also have a virtual deal room, which is meant to assist buyers, service providers, and other businesses to join them, to come to get to know what they do in order for them to do business together. So our deal room is not accessible freely unless you register using your BVN or your passport, so that we know who is who on the deal room. We'd like to have that, and I'd like to urge you to please enter the deal room and register, give your details, and we'll pass you information that might help your business. And we'll also link you up to markets, not just locally, but also internationally. As you all know, there's the Africa Continental Free Trade Agreement that is going to start entering, coming into force, hopefully by January, where there will be free movement of goods and services across borders of African countries. Now, this is an opportunity for Nigerian businesses to trade with each other. African trade is extremely low, inter-Africa trade is extremely low, and this is an opportunity because the market is massive. And you know, when it comes to exports, it's easier, of course, once the Africa Continental Free Trade Agreement comes into force. There's free movement of goods and services, which means that it's the same as selling from Lagos to Abuja or Jos to Yanagua. You can trade freely just as if you were in Nigeria. So imagine the opportunity there. So why I'm really particular about the Africa Continental Free Trade Agreement is because it means that when it comes to the issue of standards, which actually provide barriers usually to accessing international markets, because there are no barriers, as long as you have your certification, minimum standards, Nigerian standards, you can send goods and services, trade goods and services in Africa, and that is really, really important. So I'd like to urge all of you to key in and get yourself ready. If you're a startup, it's not too late. You can still start your business and start to go into agribusiness trade, because there's other areas, but agribusiness is something that Nigeria has a huge advantage over. The whole world is looking to Nigeria to feed the planet. So we really are in a very unique position. So the other service that we provide is we have a resource center on the hub. And when you go there, we try to give up-to-date information regarding new incentives, central bank policies. There's, as you know, a lot of central bank is intervening in agriculture. They've just come out with there's a wheat value chain development fund, there's a cotton value chain development fund, there's livestock, both training supports, and there's so much actually that you can get from both the Ministry of Agriculture and the Ministry of Trade, Ministry of Industry, Trade and Investments. So these are things that we will put onto this platform. We are in talks with the Ministry of Trade and Investment as we speak, and we're looking into partnering with the ministry in order for us to help to help to pass all the information and all the disseminate, that's the word, yes, all the information about the incentives that are possible. So you can get that information virtually without visiting the ministry physically. So anyway, that's just an introduction about a bit about what iProduce is trying to achieve. And today I will focus on, I'll start talking about what we're doing today. We're partnering with Jaiz Bank. Jaiz Bank is the first non-interest bank that got a license. It's 10 years now and doing extremely well. It's blazing the trail. And so we're partnering with them to talk about how agri-entrepreneurs can access financing, non-interest, that is using ethical banking services to help with agribusiness exports. And we have two speakers today, both from Jaiz Bank, because we want to have a deep dive. So we're just focusing on that. The first person who is going to start the presentation, I'm going to hand over to him very soon, is Aliyu Buhari. Aliyu is the head of the MSME department in Jaiz Bank. And after that, there will be input from Abubakar Makinta, who is the head of the Agri-Finance department of the Jaiz Bank. So the two of them are going to take over now. I'm just going to hand over to them, and they will make presentations about generally Islamic banking, generally, and then go into also the details of how exactly you can access services. So this is it. It's not just for Muslims, Islamic banking. All it means is just that you don't pay interest. You don't earn or pay interest. So please, it's just ethical banking. And I know that it's a service that both Muslims, and it's available for all religions. So just thought I'd throw that in. So at this point, I'm going to hand over to Aliyu Buhari. Please introduce yourself properly and also tell us what you're going to do today for the next 2 hours. Thank you very much. Over to you, Aliyu.
Okay, thank you very much, Hadia, and good morning, all. It's really a great pleasure having you this morning and taking us on this discussion. Of course, Hadia, we must commend you. These are the things that has been missing in the society, and we're very proud of you because, of course, like you said, the world is looking at the country to be able to, in terms of food, filling the food gap. So we can be laggard in this area. We have to make concerted effort to see that we deliver on this expectation. Of course, Nigeria, we are the giant of Africa, and that is how our brothers in Africa also look at us, with a lot of hope and expectations, and also in the global space at all, we are being looked in that perspective. So of course, I must also appreciate and commend all the participants in this meeting, on this call, for our resilience and also commitment towards contributing in bridging the gap. So having said that, even though Hadia had made a very brief introduction, my name is Aliyu Buhari. I head the MSME, which is Micro, Small and Medium Enterprise Department. And inshallah, the presentation will be in twofold, or rather in threefold. The first one is we felt it's very important. Possibly this may be the first time some of us are coming this close to the non-interest banking model, more especially the Islamic or the Sharia compliant option. Of course, when the CBN gave the license for the non-interest, it was the former CBN governor and the team at the central bank were wise enough to come up with, instead of just coming with an Islamic model, the guidelines just speak about non-interest models. So what that means is that there could be non-interest banking model that are not really Sharia compliant, that can be just ethical, and also other models that other people can also think around that and be able to come up with it. Anyway, for this discussion, as the head of the MSME department, we've been in this drive. Before joining the bank, I was with the Jaiz Insurance, where I was the pioneer head of marketing in setting it up. Of course, that was also another, after establishing the bank in 2012, in 2016, the Jaiz also came on board to complement what the bank is doing to ensure that the financing options are fully in compliance with the interests and belief and also expectations of participants within that space. That is just the brief about, and Alhamdulillah, when we started this journey of establishing the supporting the MSMEs, in the past 12 months, over 15 billion has been disbursed to over 10,000 MSMEs. And we are still counting, and we hope to do more. In achieving that, we partner with relevant institutions, agencies, organizations like iProduce, Hajia and her team, and other development finance partners like the Central Bank, Bank of Industry, Development Bank of Nigeria, and the Islamic Development Bank in the International Finance Corporation, and many other institutions locally and internationally, all to give to be able to get competitive financing options for micro, small, and medium enterprises. This we have done and we will continue to do. And I want to assure you, on behalf of the management board and directors of the bank, that we will continue to do our best to see that we are delighting our SMEs. Of course, in the course of these discussions, we will be able to explore and also understand the position of SMEs in our economy, the good job they are doing, and how we can also contribute. But I strongly believe all of us on this call have been immensely contributing and will continue to contribute in creating value, in creating employment, in generating revenue, in contributing to the GDP of the country. Of course, you know, it is beyond anything to mention that we need more of all this at this point in time. So before we go fully into the sessions, it's going to be in three forms. The first one will give you just a brief about what non-interest finance under the Islamic finance model is. And then the second session will take care, the presentation will take care of how to financing options, opportunities under the Jaiz Bank MSMEs. And then of course, the last one, which my colleague Abubakar Makinta, the head of our Agri-Finance department, will take us through on the how all that has been discussed can be related to agri-financing. Of course, you know, the experts can do it better. So that's why him being the head of the Agri will now be able to relay Islamic finance, the MSME opportunity, and then now tell us this is what we need to do to be able to get the full benefit of the presentation. So in the next 20 minutes, I should be discussing this slide. And after that, we'll take a few questions before we go to the MSME presentation. I hope everybody is seated and our seatbelts have been strapped very well so that there is no any shaking while we go through the presentation. Thank you very much once again, and yeah, welcome to this very important discussion. To start with, this is the outline. Of course, we'll start briefly looking at the definition of an Islamic bank, characteristics, implications of financial intermediation and wakala, major prohibitions, others, unlawful products, definition of riba, basic conditions of contract, basics of Islamic financial contracts, sales contract, ijara, lease, partnership, and equity-based financing, agency, and what have you. So these are the things that we'll be discussing. And all the terms here that we are not very much familiar with or conversant with, they will all be explained as briefly and as simple as possible to a layman's understanding. Of course, I know we have a lot of professionals, experts in this class, but some may have a very good understanding of some of these things, while some are meeting them for the first time. So we are taking it from the other side. We are assuming we don't understand anything that we are seeing, so that we are giving it as simple and as briefly as possible and straight to the point. So definition of an Islamic bank. As we all know, people find it difficult at times to understand that the non-interest banks, are they also like the commercial banks, or is there any difference? So the simple answer here is that they are the same. It's just that the model or the foundations have some differences. Basically, all financial institutions, or rather banks in this case, do financial intermediation. So what does that mean? They look for funds from the surplus side of the economy to bridge the gap in the deficit side of the economy. This is just basically what banks are all out to do. I have funds, or you have funds that you don't know what to do, or maybe you have utilized what you need, so you have excess funds. And we have another side that are looking for funds to be able to also drive what they are doing. So banks basically do financial intermediation, bridging this gap. Matching funds, what matching funds simply means is, I have surplus funds that I have 6 months, 1 year, that I don't have any need for, and then I have another person that is in search for funds for 6 months or a year, or as the case may be. So this is what it means by matching funds. So basically, some of the slides is for you to just see it and be able to now pick up what you will be able to pick from them while I do the explanation. So now the model here is on the interest base. Whatever they do is based on interest. So that means they do it on loans basis, where they advance cash loans and then you return back those loans with profit. And I think with an addition, which is what is being called interest. So in our own case, that is one of the key issues that we're having regarding the interest-based financing. Of course, for us, a loan should not attract any addition. Once you advance a loan, it should come back. And what we have under the non-interest model is Qarud Hasan, what we call the benevolent loan. So that means we advance you 10,000, you have to return 10,000, no more, no less. This is basically how it works. So in non-interest model, what basically we do is specialized financial intermediation on either sales-based, lease, or profit or loss sharing basis. And of course, In addition to being ethical, we are also Sharia compliant, which is a criteria for us. And we ensure that whatever we are doing, there's some criteria for financial, especially realism, morality, prohibition of interest. So in our model of financing, it's not cash-based, it's not money-based, but rather it's an asset-based, and there must be an economic activity to justify that particular transaction. So what are the characteristics of Islamic banking? One, commitment to Sharia principles, commitment to morality, depends on partners like you, developmental by nature, emphasis on object, not loan, commodity and service-based financing, not virtual economy. So that means for every 1 kobo that we are going to earn, there must be an economic activity to justify that income. It's not just, okay, I've just given you 10,000, you went and solved a personal problem, and then I'm earning another 500 or 1,000 on each, just in helping you to solve a personal problem. No, there must be an economic activity for us to earn a kobo in any transaction. So in the course of all these discussions, we should be able to explain all that in detail. So there are some first characteristics of Islamic banking. Of course, the way it comes to people, people have different understanding on it and different interpretations as well. One, that it should not be prefixed. Of course, we have some contract that more especially the sales-based contract. You have to agree from the word go, and once whatever you agree, I'm buying this system or this phone at 10,000 or 100,000, and then I'm putting my markup at 20,000 naira, making it 120. That has solved the issue. That it's a complete trade-based or a sales-based contract. It should not be a percentage of the capital. Of course, you cannot just say because I'm giving you 100,000, so you are just returning 120,000 naira. There must be justification for that. It's not to quote on the LIBOR, that's the London Interbank offer rate, or similar, or be similar to an interest-based requirements or conditions. It should not be debt financing, all partnership. To some people that, okay, it must be only profit and loss sharing. No, we have the sales base, which I'll discuss extensively, and then we have the lease-based contract as well. So it's not just partnership-based. The partnership-based contract are the ones that we do the profit and loss sharing concept on. So implications of financial intermediation. Of course, number one, needs always exist. There's always need for exit. There's need for maturity matching. I need fund, I have surplus fund for 6 months and someone needs it for 1 year. Of course, there's no maturity matching. When I will need my fund 6 months, possibly the business is not yet ready to be able to return the fund. So you have to find a balance to be able to match funds funding so that there wouldn't be issues, of course, and that's why financial intermediation comes in. Always need to minimize risks. Of course, people that are having the fund in surplus, they are averse to excessive risks. So they are being very careful to expose themselves. Now banks get this fund to see and develop some strategies that will be able to minimize those risk exposures. Avoiding market risks, of course, price and liquidity, more especially for us in Nigeria, and of course, the global economy. We know how things have been changing. Every day you go to the market, you find out things keep changing. So all this market risk is honestly a very much concern that needs to be looked at in terms of financial intermediation. Liquidity conscious, serving interests of principal, shareholders and depositors, then full disclosure to depositors. What are the major prohibitions in the non-interest model? Of course, interest is one. Unfairness, whatever we are doing must be fair to all parties, from the shareholders, depositors, customers, everybody. Uncertainty, we have to avoid it as much as possible. Gambling, monopoly, short sales, unlawful products, and what have you. Other prohibitions are interest-bearing loans and bonds, interest-bearing securities, ownership and trading in shares of corporations whose main line of activity involves rivers such as conventional banks and insurance companies, charging costs of funds, delayed payment, rent on money, overdraft, guarantees, financing against bills or receivables, sales or debt and debt instrument, futures and forward trading of currency. These are just some of the prohibitions that are within the non-interest or the Islamic non-interest model. Unlawful products, of course, alcohol, pork, gambling, pornography, brothel, conventional financial institutions, and what have you. All this we cannot invest in, and we cannot finance in our business. So now, this is the major foundation or the bedrock of the difference between an interest-based institution and a non-interest-based institution. So basically, what is riba or what is interest? Interest is any increase or advantage obtained by the lender as a condition of the loan. So that means, I've explained this, you advance 10,000 to a colleague, to a brother, or to a business, and then you are now asking him to return that 100,000 with an addition. So that is interest. Technical meaning is increase taken as a premium from the debtor in a debt or an account of delay. That is delay in payment. So basically, interest is the charge on delay in payment of or increase on account of exchange of money of the same kind or exchange of certain items. So basic conditions of contracts. One, of course, for us, like I mentioned earlier, we are majorly into trade-based financing, and there must be an economic activity to justify our income. So for that to happen, some sort of contract has to come in. And it's important to mention here, I know for many of us that have passed through the institutions, what we are doing is it one of the law courses. This business courses also, these are some basic things that must be established for a contract to be valid and genuine. One, there must be two parties. One person cannot enter into a contract. Then there must be a mutual agreement between the two parties. There must be exchange of items, and then there must be offer and acceptance. So now this is the foundation, this is the basis of our contract. So that means these four things must be there for us to be able to earn one kobo for any transaction that we are going to do. Otherwise, that transaction will be invalid and will be invalidated by our Sharia or Advisory Council of Experts. So now, what are the bases of the Islamic financial contracts? Majorly, and for the purpose of these discussions, we'll be looking at the sales-based contract, the lease-based contract, and then the sharing or partnership-based contract. So under the sales-based contract, which is exchange contract, also called the debt-based financing by in Arabic, we have about 6 of them. We have by murabaha, by muajjal, by salam, by istisna, by bisamanin ajal, by as-sarf. So majorly for our financing, we deploy the number 1 and number 2. And for agri financing, we go to the number 3, and then for manufacturing, number 4, as you can see it on the slide. So for by murabaha, what it simply means is cost plus. So what, just like the way I explained earlier, you want to buy a system or a laptop worth 100,000, we add a markup and sell it to you. It costs 100,000 from the market, and then we now sell it to you at a markup of say 20%, making it 120, and then spread it over the period of 12 months. A lot of people that have been able to access our financing in the past 2, 3, 4 years ago have been really appreciative of the model of financing, because of course, change in exchange rate does not affect our prices. Change in monetary rates, of course, MPR do not affect our pricing. And once it is Murabaha, you know, if you conclude a transaction today and tomorrow that cost of items is 120, or maybe inflation has changed in the society, in the economy, it does not affect. And a lot of people have been enjoying and appreciating this model of financing, because you close the deal today, the deal is closed until it is settled. Then we have the Bay Ma'ajal, which is credit sale. This is majorly a contract that we do with big stores, and we now go into partnership with vendors, and then now we agree, we refer our customers to these vendors. So they sell at a large sum to us on a deferred payment sale. So once we get our customers, we send them to them. The benefit here is our customers are able to access financing at a discounted rate. Assuming that laptop, we have a partnership with an IT firm of selling HP laptops at 100,000, at 95,000, which you can get at 100,000 in the market. So what this means is, for any of our customer that comes and want to buy that particular type of system, he will be able to go and get it at a discounted rate of 95,000, for example. So the advantage here is the customer, for us as a bank, we've been able to get discount for our customers. The customers are able to be financed at a very competitive rate, which they will ordinarily not get in the market. And then, of course, the last one is the vendor or the IT firm in this situation is able to get more sales. Then by Salam, which is the part delivery sale, this is mostly being deployed for agri-based financing. Of course, it's been used for other commercial-based businesses, but majorly because it's a deferred sale, so we can enter into partnership. Okay, I'm into farm production, I'm into cocoa production, and I want the bank will finance you with the anticipation that in the next 6 months or in the next 12 months, you'll be able to deliver on those goods. So this is basically how the Bay Salam works. I believe Mala Abakar will be able to discuss extensively on that. Bay Istisna is for manufacturing. What this does is, this is the contract being deployed in manufacturing or construction. Of course, I know a lot of people here because it's more agri directed, but we are trying so that you understand the whole gamut or the concept of the non-interest under the Islamic finance, because it's not only your agri products. You may need to set up your office equipment, you may need to construct your warehouse, your pens, your farmhouse, you know, so many things. So that's why we are bringing everything, so that at least you understand that the non-interest financing is not one cap fit fits all. Each product, each needs has a specific product that will attend to it, just to ensure that fairness, honesty, and justice is being administered, so that whatever you are doing, you are being given adequate and fair treatment. Then we have the Bay Bisaman and Ajal, sales purchase or deferred and installment based. Then by itself, this is for currency, the change, for those that are interested in foreign currencies in doing their transaction. So with this, you can understand that virtually there is no any sector or any need for a business that has not been touched. By Muraba, we mostly deploy it for working capital financing. Same with the Bay Ajal, then Salam for deferred businesses or contract that will require delivery at a future time. This is now for construction. I need to construct my penthouse. I need to construct my fish pond. I need to construct my farmhouse. I need to, whatever it is, or manufacturing. These are the contracts that are being deployed. Then the second one is the Ijara, or the lease-based contract. Under Ijara, we are looking at the main Ijara, which is leasing for a stream of rentals. Then we have the Ijara or Iktina, which is lease to own, also known as Ijara Muntahia Bitamlik, lease that ends with ownership. What this happens is there's the first one, the Ijara or Iktina is a contract that we also deploy in buying equipment. You want machineries and equipment to process your produce and what have you. So we deploy the Ijara contract. On that, unlike the sales-based contract that I've earlier discussed, where once you enter the contract, even if we entered the contract today and tomorrow you came back, you want to make payment, we have the option of rebate is at the instant of the bank to say, okay, we shall give you rebate, because of course it's just like the normal trading business we do every day. You can't go to a shop and buy an item maybe on credit, and then because you have agreed to pay next week, and then today you get tomorrow you get the money, and you go and then you said you have to be given discount. No, it's at the discretion. But for Ijara-based contract, because it's a rental or is based on rental, assuming we have agreed for a 6-month contract, and then 2 months or 3 months down the line, you are able to get funds. That means we will only charge you for the 3 months. The remaining 3 months that is left, since you didn't enjoy it as a rent, then the bank will have to refund you the difference. So you stand to get a rebate. So for this, the contract will be structured in such a way that as you are paying rental, you are also paying the cost of the equipment. And this is majorly this Ijara or Iktina that we deploy in at times house financing, capital machineries, equipment, and other related items. Then Ijara Summal Bay, this is basically a contract. Someone may decide, okay, let's just do the Ijara, that is the lease. Then after the lease, we may now decide to look at whether if the item I have interest in it to purchase it, or I don't have anything to do with it. So that is that. Then Ijara Masfufu Bizimma. This is mostly deployed for mass projects when institutions or big companies are into big projects of usually mass projects. So this is basically some of the lease-based contract that we deploy. But like I mentioned, majorly we use the number 2, which is the lease to own, because of course, in most of the financing that we do, the customers always expect that at the end of the contract, they own the equipment or the asset that is being financed. The last is the partnership or equity-based financing. Under this, we have the Mudaraba and Musharaka. Mudaraba is a trustee partnership, which is based on the profit sharing. So as it is, basically what it's saying is that you go into partnership and you provide, there's the Rabbul Mal, that's the owner of the capital, and then the entrepreneur, the Mudari, the entrepreneur. So what happens is the bank or the financial institution or one partner will provide fund to the other partner. We are all, in some of our dealings, we do some of these partnership-based contract or equity-based contract, only that possibly maybe because it's coming under this framework, that's where we now see it. And then we have 2 types. We have the restricted and we have the unrestricted. Under the restricted is the one that I will say, okay, I'm giving you 10 million for you to go and farm cocoa or for you to go and farm rice and what have you. So what that means is, by the time we define the contract, the duration, what to do with the money and everything, it is restricted. I am not allowed in any way, maybe even we may even decide on the geographical location. It has to be in Zaria, it has to be in Enugu, it has to be in Port Harcourt, it has to be in Lagos or wherever it is. So that is a restricted Mudaraba or a trustee partnership. So I'm providing the fund, this is what you will do with it. So that means the Mudarib or the entrepreneur cannot go outside what has been agreed. So that's the restricted Mudaraba. And what happens in this situation is we will agree on the percentage of the share of profit at the end of the day. If there's profit, we cannot agree on the amount coming to any party, but we can only agree on the percentage of sharing. We can agree 60, 30, 40, 20, 10, 90, whatever. However, if the business succeeds, we share the profit. And if the business lost, everything will be gathered to pay the Rasul Mal or the capital owner. And then the entrepreneur will go, he has wasted his time, he has wasted his energy, and what have you, he will stand to get nothing, because everything about the business will be put together to pay off the capital owner. Then we have the unrestricted. The unrestricted, of course, from the name, what that means is you might come and then we agree, okay, take this 10 million. I know you are an expert. Possibly, I know you want to go and do cocoa farming, but then you are you have the leverage to be able to divert to do other things, because I have confidence in your entrepreneurial skills. So I will be able to have confidence that you will be able to deploy those funds in doing things that will bring income. And of course, the other one is the musharaka, which is the joint venture, and where it is required. The conditions, the distinguishing difference between the two is that under the musharaka, the both parties must contribute both in capital and in activity. While in the mudaraba, one person is providing capital and the other is providing managerial skills. In musharaka, both parties is a condition for musharaka that both must provide capital and both must jointly do the business together. Maybe you are in Lagos, I'm in Kano, I will send money to you, you will buy items and send it to Kano, and then I will sell. So we are both doing it together. In the event, I decide, okay, just do the business, you be the one to travel to Lagos, go and get, it's more of a mudaraba. However, if the contract is under musharaka and there are issues at the end of the day, once it is established that one party remain a sleeping partner, then of course you cannot blame the other, the active partner, for any misgiving or any issue that may arise as a result of this partnership or the partnership not going in the direction that it was expected. So these are basically a brief about Islamic finance, the modes and the contracts of financing. Then the last one is under the agency, which is also the benevolent loan and services falls under. One, we have the benevolent loan. Of course, this is not just an open ticket, but of course, except in extreme situation for customers that have proved their commitment to the bank and their partnership and their worthiness to be able to access this this support. Then of course there are other services like wakala, power of attorney, agency, opening of LC, kafala, letter of guarantee, RAM, pledge, collateral, either object or transaction or independent. So these are the agency base where we charge you and on a fee for providing a particular service on your behalf. So these are basically the major instruments deployed in our model of financing. So I think maybe, I don't know if we will take one or two questions before we go to, so that at least we'll be able to address some of the one or two issues that are being raised in this presentation before we go to the second presentation, where we'll see how those things are being put into action. Thank you very much.
Thank you so much. That was a very, very informative presentation. I've learned so much myself. And I think that we will probably have to come back and have another session on one or two areas. You mentioned something about financing for warehousing or financing for farmhouse. So these are really important for agribusiness entrepreneurs. As you know, agribusiness is not just production, but it also has to do with the value chain. Storage, transportation, like for instance, if perishables, you would need cold rooms, you would need cold trucks, for instance, if you're transporting meat, etc. So definitely the other products aside from the agri are extremely important. And of course, you know, the value addition to agri-produce, the agripreneur gets more value. So if you sell primary commodities and you export them as they are, you only get a very low price of the commodity. But if you add value, in other words, if you have a processing plant, whether it's rice processing or whether it's sugar cane that you are converting into sugar, edible sugar, these are things that we really should be looking into, because we are producing primary products, but we are not processing locally. And what happens is that other countries come, buyers from other countries buy the local produce, and then they end up processing it over there and then selling it back to us for a markup price, which is usually 100 times more than the actual value. So we're not getting the value. So I think that this is a very important thing. We should really look into agribusiness value addition rather than the primary. This is what is important. But in any case, what I'm going to do now is that I'll open the floor and allow you again to please take some questions, because a lot of people are hearing or finding out about Islamic finance for the first time. And even if they've heard about it, I doubt if many people have had a very comprehensive and detailed session like this. So let us have some questions. It could be 15 minutes if that's not too long, and then we go to part 2 of this session. So the floor is open. Let us just allow people to speak, but please do not speak for more than a minute. Your questions should be very concise, and also they should be questions, please. They shouldn't just be anecdotes, or because otherwise we will lose the value of the session. So please try to ask real questions and make them nice and short. After a few questions, then I think Aboka, I'll let you, Aliyu, I'll let you handle the question and answer session. And then maybe 15 minutes before you go ahead to the next part. And those of you who don't want to speak, those who don't want to speak, you can just write your questions in the question and answer. That's also okay. Or you raise your hands and you're allowed to speak. So the admin will allow you to speak. Thank you very much.
Okay. While we are waiting, but my attention has just been drawn that we've already, I think, taken an hour or more into the sessions, and so that we are able to, maybe if we'll just go ahead with the second session, so that we take the questions at once, and then my colleague will do the discussions. What do you think about that, Haja?
Oh, as you wish. It's fine. It's your session. So
that's fine.
So okay. That's all right. We can go ahead. Thank you.
It's all right. We are back again for the second session. Of course, we had wished to have taken some comment or questions, but then we are trying to see how we can make optimal usage of our time. So we'll take it up, because some of the things that have been earlier discussed in the first session, we will now see how practical they are in our business, or maybe how we will be able to explore them in accessing financing. Of course, knowing one item or maybe one concept is one thing. It's more of an academic, and then now seeing that put into practice is another thing. So now this session will now be able to show us how practicable deploying such models or contracts is in Islamic finance. No. The head of Agri will be coming to do the discussions at the end of the day. So I think I'm still the one on the, yes, okay, thank you for that, sorry. So as I mentioned, the second part of the session is how to assess non-interest financing for MSMEs. Of course, many of us are within the agri space, but of course, it's important to mention that the agri space is very wide. So the MSME space rather, and agri is one key component that most SMEs operate within. So we'll do the discussions generally, and our colleague in the agri department will now be able to narrow it down to our core specialization. So the outline of this presentation will go this way. One, we'll have the introduction. Two, we'll have the overview of the market, MSME market, and overview and operating environment. Then what does Jaiz Bank have for SMEs? Then illustration of some of those MSME products. So I strongly believe we are not hearing the word MSME for the first time. However, for the person that may be struggling to really understand what it means, is we have it's simply micro, small, and medium enterprises, and this has been defined mainly based on number of employees, asset size, and turnover. What I'm just trying to say here is that there is no one definition of what an SME is. For some countries or some jurisdiction, we only have SME, small and medium enterprises, and then much later we had the micro, and currently in some jurisdictions we have even what we call the nano. So I will try to do some justice to all these as we progress in the discussion. So for us in Nigeria, we have an agency that is solely responsible for the development of SMEs in the country. And this is the small and medium enterprise. For small and medium enterprise, for SMEs, a small enterprise are businesses with between 10 to 49 employees and an annual turnover of 5 to 49 million. Then medium scale enterprise with about 50 to 199 employees with a yearly turnover of 50 to 499 million. On the other side, CBN define an SME as companies with an asset base that is between 5 to 500 million and a staff trend that is between 11 to 100 employees. BOI, on the other hand, has its own definition. A micro enterprise with less than 10 employees, total asset of less than 5 million, and an annual turnover of less than 20 million. So a small enterprise by BOI definition is 11 to 150 employees, total asset of 5 to 100 million, and turnover of between 21 to 100 million. A medium enterprise is one having between 51 to 200 employees, total asset of 100 to 500 million, and annual turnover of 100 to 500 million. So you can see, even in our country, different agencies have different definitions of SMEs and how they look at the market and how they respond to the needs of the market. Of course, if we keep going, we have the Nigerian Bank, we have the Development Bank of Nigeria, we have other institutions as well. So, but of course, these definitions, I think, are enough to just give us a feel of who is an SME. So now, SMEs are generally businesses that operate at the lower and middle level of the economy, and SMEs are set up either by one person, which we call the sole proprietors, partnerships, which we have 2 to 20, or an association 5 to unlimited, all to augment working capital of an organization. SMEs are targeting customers who are engaged in various MSME business in enclosed business locations, especially that are close to financial institutions, or as the case may be. Generally, SMEs have been defined as globally as catalysts of economic development in the creation of employment, opportunities and wealth creation, especially in developing economies. In countries like India, China, Bangladesh, SMEs have been adopted as a major change mechanism for moving large portions of the population out of poverty. And of course, government and international development finance institutions are therefore increasing their focus and resources to support and grow the segment. And of course, you will agree with me, this government also is not left out in this. It has done a lot in trying to bring a lot of initiatives that will support the SMEs. So now let's look at the Nigerian context in particular. The MSME segment in Nigeria is key growth contributor with impressive growth performance. Of course, there has been recent statistics, and a review is still ongoing, trying to ascertain the number of SMEs. The last one was sometimes in 2016, 2017 that is showing, though at this presentation, I have the report for the 2013, which is putting the SMEs at 37 million. But the most recent one that was done in 2017 by Smes and MBS, that's National Bureau for Statistics, we are looking at about 41 million SMEs. Another one, a survey is ongoing, which is being also championed by Smes. Studies by the IFSC showed approximately 96% of Nigerian businesses are SMEs compared to 53% in the US and 95% in the Europe. SMEs represent about 90% of the manufacturing industrial sector in terms of number, also in agri as well. And though the recent survey has shown a much improved contribution to the GDP, of course, this is a plus to the various intervention that has been done by the CBN and other institutions in this space. In Nigeria, the operating environment for SMEs is mixed, characterized one inability to access funding from conventional banks and other financial institutions due to discriminating and credit requirements, high interest rates of borrowing costs, infrastructure challenges resulting in high operating costs. Of course, we know one key challenge of business inability to go closer to financial institutions because there's a huge gap in terms of management skills, business structuring, bookkeeping and record keeping, money management, sustainability and succession planning, information technology. All these things are key by the time you are coming to the formal sector to be able to get support or financing. Of course, you cannot be informal and expect the formal sector to support you. So there's a mismatch, if you allow me to use that word. So you have to be formal so that the formal sector will be able to recognize you and see you. Otherwise, if you are informal, then you are left with the option of only going to the informal sector for support. Then, of course, access to market and what have you. And like I mentioned, there has been deliberate and sustained effort by government at the federal state level to provide support in form of policies and direct financial intervention to harness the MSME. Just recently, the CBN had just launched the 100 for 100. Of course, this is another intervention aside creating the non-interest option of all its intervention products. The central bank was also, as a response to the COVID, introduced the target credit facility during the COVID, which we popularly known as the COVID-19, in addition to others like the Agris and others that we'll discuss in this. So the most recent one, I think, is the 100 for 100. What that does is simply trying to get 100 business being financed up to the tune of about 5 billion within 100 days, and then they will start the cycle again. So this is just something that has been introduced into the market. Most commercial banks are also looking at it because it has to be in partnership with the central bank. So the segment is most viable to revamp the economy in the post-COVID pandemic. This is something that it has been agreed, and it has been a topic of discussions virtually in all forums that economy and revamping the economy is concerned since the advent of the COVID. So for the CBN, just like the way I mentioned previously, some of these intervention schemes have their intervention options. We have the target credit facility, which we popularly known as the COVID-19, which can only be accessed through NISAL microfinance. Of course, we have the household component of the TCF, and then we have the enterprise component of the TCF. The household component, you can only access up to 500,000, and then for the enterprise option, initially, I think you can access up to 2 million, but now it has been dropped to around 750,000. Then we have the MSME DF. This has to go through a commercial bank, and you can access up to 50 million. Of course, you have to meet all the conditions and requirements of accessing financing in that commercial bank. Majorly, the issue of collateral and other related things will come up. The key thing here is that you are getting it at a competitive rate of 5% due to the also intervention by the central bank. But by March 2022, it will go back to 9%, which is the actual rate. Then we have the Accelerated Agricultural Development Scheme, AADS. We have the Agri-Business Small and Medium Enterprise Investment Scheme, AGMIS. For AGMIS, when it started, you can do up to 10 million. It's really targeting at young entrepreneurs that are starting up. So when they started it with your certificate, with your qualifications, you'll be able to access it. But of course, that has also been reviewed. And now instead of that 10 million, I think the last update I'm getting, it has been dropped to somewhere around either 3 million or thereabout for the AGMIS. Then that also can only be accessed through NISAL microfinance bank. Then we have the Real Sector Support Facility, which is the RSSF. And there are many others that will be discussed or maybe by my colleague, inshallah. To encourage lending to SMEs, the CBN recently released draft guidelines for licensing and regulation of credit guarantees companies. We have the impact credit guarantee. This is also part of the effort of the central bank to improve access to lending for SMEs. So we've been able to look at what the government is doing, and what, of course, Smes 2 on its own part has a number of financing options. We have the all-up under the Smes, one product, one local government, where they support different businesses at that level of the economy. We have the conditional cash grant, and then of course we are currently talking to them about a matching fund, which will be at a single digit as well, to support businesses in the agri space. These are all opportunities that will be coming as a result of our partnership also with Smes and other government institutions. So we have others as well, but for the purpose of these discussions, we will now discuss the Jaiz Bank MSME offering. So what do we do? Basically, like I discussed earlier on the non-interest financing, we're essentially a trading house providing financing to customers through either sell, partnership, or lease contract. Of course, there are other ones, but because these are the major ones that we currently deploy, that's why our discussions are being centered within this space. Then number two, it's important to let you know that we do not give or receive interest nor finance anything that is harmful to the society, like alcohol, tobacco, gambling, etc. Then in doing our business, we also seek to avoid garar, which is speculation, uncertainty, deception, and many more. So by the right side, you there's a graphic there that is able to now just summarize between the non-interest and the conventional based financing. Of course, we are profit-based while the conventional is interest-based. We are asset-based financing while the conventional is currency-based financing. We do direct trading while trading is prohibited in the interest-based financing. Then mandatory ethical and moral screening. While they are not mandated, the conventional are not mandated on ethical or moral screening. Of course, anything that is good to go it's good to go there. Our current strategic goals centered around entrenching a reliable and effective information technology and MSME growth. So what is the definition of SMEs? I was able to define what other institutions are looking at SMEs in the space in the Nigerian context. So for us in Jaiz Bank, for any business that does an annual turnover of between, we have 3 major categories, even though for us also we've been able to acknowledge what the nanos are doing. That is the those that are even below the micro. So what we do is we have another product that we call under our financial inclusion, and we will be able to explain just briefly on that as we move on. So for businesses that do a turnover of between 1 million to 5 million, so they can access facility of between 100,000 to 2 million, and these are defined under our micro businesses. This is not to say the business that does a turnover that is at medium enterprise cannot come and access it. But of course, you know, your capacity will determine what you will be able to access. Then secondly is businesses that will access between 5 to 50 million. They can access 2 to 5 million, and they are being termed as small businesses. Then for any business that does above 50 million, but not more than 250 million, can access up to 20 million. It's important at this point to mention, we are currently in discussions with, in fact, we are almost done with the transaction, if not for 1 or 2 things, hopefully in the next couple of weeks, before the year runs out, we are expecting an inflow of about 5 billion from the Development Bank of Nigeria. And based on the experience we've had in financing the MSME space, we've been able to review some of these conditions and some of these terms. So we've realized a lot of businesses that are within the SME space in need of accessing more than that 20 million, because we try to make our terms to be very SME friendly. So, and as such, with our board approval that kind enough to grant and also put their commitment for us to support the SME space, they've been able to grant us approval to do up to 100 million for SMEs. So you see, this means more opportunities for SMEs that are within majorly the small and medium space, so that the impact will be more, and the medium enterprises that are in between the line between the big businesses and the small businesses will now be able to upscale what they are doing in a very big way and be able to climb up the ladder. And of course, you will agree with me, the impact that will have to the economy. So what are the financial requirements? One must have an existing business, not below 1 year, then opening of a current account and operating satisfactorily for at least 3 months. The ideal thing traditionally for all banks, not only Jaiz, is you open an account, you are required to spend 6 months before you begin to start talking about financing. But for us in SMEs, we now bring this to 3 months. And kind enough, our risk management committee has also given us a waiver that for businesses that are really in business. So it's not like a blanket check. So if by your records and your operations, you are able to convince us that yes, you are really in business and there's no reason for us to have to wait for 3 months, we have that provision to accommodate your business once you open an account. So the good news I'm sharing with us is for all businesses that are on this call and they have evidences to show that they are really doing good in what they are doing, you can be able to access financing once your account is up and running with us. And then for the financing amount, of course, the other slide has taken care of that. The only thing is we didn't discuss the financial inclusion, which is the baby of the department and is part of the bank's effort towards social financing. Of course, you will agree with me. We all know what it takes whenever we go back home to our various villages or localities. We are in Abuja, we are in Kano, we are in Lagos, but we, in whatever city we are, most of us are from one village or the other, and we all know what it feels down there. So we were able to come up with a financial inclusion model that will be able to support the rural dwellers, the micro enterprise at those rural locations. We've implemented the pilot where we have supported over 5,000 women, women entrepreneurs in a particular cluster in Katsina, in my Adwa local government, Zango, Bauri, and Daura, to the tune of over 100 million. And we are currently reviewing the performance, and we hopefully hope to go back to our management and board and tell them the success that has been recorded, so that we'll be able to expand more. And we've been able to also come up with another model, because even in the cities or semi-urbans where we operate, we have people that really need our support. And all they need is 10, 20, 30,000. So we came up with another model. The first model will require us getting approval from the board, getting approval from the central bank, before we can deploy. So this usually takes a very long time. But now we came up with another model that will have the JAFIC virtual teams in our branches, where they will be able to go out and meet businesses in their clusters. Under that scheme, we are now planning to, we have financed over 3,000 businesses. My colleague will discuss the Kura project, where rice farmers within that space have been financed under this model. And then, of course, we have the garment clusters, where we have profiled over almost 12 to 13 cooperatives, and we are currently disbursing to the tune of over 100 million for financial inclusion. This is just to show the commitment of the bank towards touching and being in terms and a reality. It's not just saying making life better, but we are making life better in reality and in action. So this, we must appreciate our board and management for believing in us and giving us this support to see that we really touch lives positively. Then, of course, we must a business must produce a proof of ownership and obtain satisfactory reference to be produced, more especially those that require NAFDAC, SON, Pharmaceutical Council, and other related institutions depending on the segment. What are the other financial requirements? Security, of course, will require a key man risk careful on asset or items. Then the promoter also must have a key key man risk careful as well, so that in the event of death, we don't have to start going to his family or next of kin trying to get back our funds. Of course, for some, for 2 million and below, where we require guarantors, we require post-dated or undated checks. Then personal and cross guarantee for facility of less than 2 million, movable asset or landed property on simple deposit of facilities above 2 million. Then investment products, we deploy Murabaha, which is cost plus markup. I've discussed this previously. Ijara or Iktina, lease to own, then any other suitable Sharia compliant product. So what are the target market? We have the market association, suppliers, key distributors, agri-businesses, micro businesses, and other businesses within the space. Illustration of some of the Jaiz Bank MSME product. One under the working capital financing, which is majorly the Murabaha. These are majorly for trading and stock and consumables. So we deploy the Murabaha, of course, like I mentioned. Basically, you require facilities. We do this for mostly businesses that will require 2 million and below. Cross guarantee if they are in associations, schema, risk, careful for the promoter and the items. Then personal guarantee from reputable member. Then under working capital, if you need 2 to 5 million, you will expect that you already have existing equipment or machineries or valuables that you can give as collateral, and then we'll register it under the National Collateral Registry. That will serve as a security, and you'll be able to access up to that. We are still looking at some of these conditions, but for now, this is what we do. And of course, the experience and the lessons learned will guide our further guide on these requirements and conditions. Then still under the working capital, if you want to access between 5 to 20 million, you have to provide a landed property on simple deposit or equitable mortgage and other requirements as well. Then the tenure is between 18 months to 30 days. That's about 1.5 years, majorly for the Murabaha for working capital financing. And then if it is equipment, we do 2.5 years. So payment source from operational cash flow, proceed of sale of product to be logged into the account on daily basis. Then the second one is the Ijara. Under the Ijara, I've extensively discussed. All this is majorly used to finance equipment. And then of course, lend on the equipment if it is not above 5 million. And then of course, we require title document if it is above 5 million, or as the case may be. This and many others can all be extensively discussed in all our branches. So all you need to do is, number one, if you don't have an account, make arrangement to look. You can go to our website. We have over 40 branches virtually in all the regions of the country. So you can look at the one closest to you, walk to them and discuss with them on our MSME financing as we have discussed. So all you need to do is open an account, either individual if you've not registered your business, or corporate, either a sole enterprise, a partnership, or a full corporate if it has been registered. Then of course, open the individual or corporate account. Then from there, you can discuss with your account officer on basically what you do, how you do, and the areas you are looking at in terms of accessing our financing. And I can assure you that you will be delighted relating with us. Thank you, thank you, thank you.
Thank you very much. That was excellent. We have a few questions at the Q&A. If you can open the Q&A, you can have a look and please answer. And also we have some hands that have been raised. So if we could quickly do that in 10 minutes, we have the last segment because we only have about 32 minutes to go. So Q&A box first.
Yes,
and
I've checked it.
Hands. Yes.
Yes, I think the first question there is to access the non-interest finance, do we have to apply through iProduce or through Jaiz Bank? I think I've answered this. Yes, iProduce is now a linkage trying to now let you understand just like what we have done now. It's part of its effort towards ensuring capacity building, disseminating information and knowledge so that you are being guided. Of course, from iProduce now, you now move to Jaiz so that you'll be able to access. So that means you have to open an account with Jaiz. Then what are the prerequisites for accessing the Ijara? This has also been discussed. Of course, we use the Ijara majorly for the equipment or machinery or asset-based financing. So if it is below 5 million, we can take the equipment or existing equipment to serve as collateral. And then if it is above 5 million, we are required to provide a tangible security. So Haja, these are some of the questions under the Q&A. Then
okay, I just wanted to say that the presentation will be the link to the presentation will be emailed to all that who have registered, so you can go back to the presentation if you still have need clarification. There's some hands that have been raised. I don't know if you could see 2 people have raised their hands. If we could allow them to quickly give their comments. I think admin has to do that. Admin, can you look at the raised hands, please? Or have they brought their hands down?
Okay, so we'll start with Mr. Wonambela. You may go ahead, sir. You have to unmute your mic.
All right, thank you for the presentation. I appreciate the iProduce and the Jaiz Bank members of staff. It was a great presentation. The question is that I am actually a commodity broker, and over the last 5 years, there have been commodity exchanges coming up to facilitate trading in agro-produce. I don't know if Jaiz has any interest to work with the Commodity Brokers Association to facilitate this business, because it encompasses the entire value chain of agri, from warehousing to trading to delivery and logistics, etc. So I think that's just the question for now. So we want to relate with Jaiz Bank closely as an association to work on this business together. Thank you. Hello.
Okay, thank you very much. My colleague Abubakar Makinta from the Agri Finance Department will discuss, will respond to that.
Thank you. Yeah.
Thank you. Good morning, Mr. Bolahan. It's actually a pleasure meeting you here. I earlier have taken note of your contact because you've sent that through the chat box, and I actually intended to engage you and of course all other participants that dropped their information on the chat box. Now, coming back to your question, you realize that as a bank, our appetite is huge as far as you know, the agricultural space is concerned. We also have a clear understanding of what is happening within the domestic market in terms of you know, aggregation, value addition, and export. And in this regard, you cannot discount the you know, contribution of your association, you know, to facilitate, particularly, you know, what I have just mentioned. So therefore, it would be really a great pleasure for us as a bank to work with your association to see how we can actually add value to this space. So you are most welcome. And as I have said, I've already taken note of your information, and we will really take this conversation further. Thank you.
Okay, so next we have Ifeoma Godwin. So please, you may go ahead by unmuting your mic and asking your question, please.
No, good afternoon, sir. Good afternoon.
Good afternoon. We can hear you loud and clear. You can go ahead.
Okay, sir. Sorry, sir. Like myself, there was a time I chatted with one of your, I don't know if it's a customer service or through online. So I made a requirement. I told them that there are some companies like Apple and Pears and Romoy Ibadan, but now they are answering edible, premium edible, subsidiary of a flour mill. So, but the issue I always have is finance. That was the reason why I can't supply. Then I'm also looking at going into export of agro produce. But when I asked of the requirement of getting a loan, he told me that I must open an account and run it for 3 months. But just that where I stay, I don't know if there is any of your branch close to my area. I'm staying close to Ikotu area. So Ikeja is very far from me because I have a child that is challenged, and my nanny that was staying with her has relocated back to her state. She's an elderly mother now. So coming from my place to Ikeja, and I don't even know Ikeja very well because I packed newly to my place at Ejibo. That's where we build our own house. So, but I don't know. I want to know more about Jaiz Bank and what it takes for a starter. Thank you, sir.
Okay, thank you very much.
Thank you.
Sorry about the situation you have just pictured. And number one, apologies that you couldn't really get, or maybe you are not very clear on how to go about supporting your business. Firstly, I think some of the issues you raised, I don't know if you have been with us from the beginning. We have extensively discussed all these, and what I will advise is possibly at the end of the session, you go through the link that will be provided so that you get what you have missed in the presentation. In Lagos, we have 5 branches. If Ikeja is far away from you, we have additional branches. One we have in Marina, we have in Ikoyi, we have at Apapa, and one other location. We have about 4 or 5 branches in Lagos. So you may still look at the one that is most closer to you. Of course, you know, just the way Hadia had presented, we are just clicking 10 years in operations. So, and of course, they said a journey of a million miles begin with a step. That is our steps, and we hope to see how we expand as we move forward. Of course, the way the customer care or the online representative has responded to you, that you have to open an account, you have to spend 3 months, or that, of course, that is a requirement, because we cannot relate with a customer with a third-party account. We are a financial institution, we have our own model of financing, so we require that you have an account with us. And like I mentioned, for the 3-month requirement, ideally or traditionally, each business is supposed to spend 6 months to access financing. But because of our interest to support SMEs, we bring it down to 3%, 3 months. This is not to say that we are expecting you must do 100% of your business, but it's just to give the businesses a good feel of what a non-interest financing is, because our model expects us to be very fair to you, to be very honest with you, to be very just with you. So we wouldn't want a situation whereby you go into a transaction with us today, and then tomorrow you come panting or crying that, no, I didn't know this, you didn't explain this to. The idea of the 3 months is for you to get acquainted with that within that 3 months of all that you need to know about the non-interest model, so that by the time you are going into it, you are going with your 2 eyes open. So of course, we are not just here to do a one-off business and go. So ideally, you should have a good understanding of your business partner. So the essence of that period is for you to really understand us, and for us also to understand you, so that we have a long-term relationship that we will all be happy. So I hope I've been able to attend to you, and of course, you'll be able to find time to look at the branch closer to you before we come much more closer to your doorstep. Thank you very much.
Okay, so I will try and visit Ikeja. That's the one I noticed that will be closer a bit. But then I want to, after running the account for 3 months, I want to know if you could do finance, like if I have a local supply to all those companies, do you assist?
Yes, we do all that. That's why I mentioned that all these things, you know, it's not something that can be discussed online. You need to go meet your account officer so that he understands what exactly you do and how you do it. And then I mentioned so many options or instruments that we use to deploy or support businesses. So they will be able to advise you and tell you, this is what we can do and this is how we can do it. Thank you very much.
Okay, sir. Thank you, sir.
Excuse, can I come in here? I am afraid we have run out of time, and we have not even gone into the export of agri-produce segment. So if we don't mind, can we finish that and then come back to question and answers? Thank you.
That is noted. Inshallah, Bakar Makinta will now take up the space, so his profile can be shared for participants to view. Thank you.
Okay. Hello. Good afternoon, ladies and gentlemen. Am I being heard?
Good afternoon.
Yeah, you're
Okay.
clear. Loud.
Okay, thank you so much, Aliyu, for that wonderful presentation. I think that has greatly made my own, contribution so easy. Having said all of those, I would like to first start by thanking iProduce, particularly the promoter, Hajia. Hajia has really been, a role model for so many of us, and we can only pray to Allah subhanahu wa ta'ala to grant her, the best of wisdom for her to take this, initiative to the best level. Then, before saying anything, I would like to share a little story. Asia unconsciously has actually, created a scenario in my house that after a few days or so, a name will certainly be mentioned by my wife. I was actually part of those that attended the iProduce program some times ago, the launching actually of the iProduce, and we were given a souvenir. In the souvenir, amongst other things, was actually a parcel of rice, well packaged, and a cup of tea. And when I made it back to the office, I said, I will not share this with anybody. I will just have to take it to my house. And I took it to my house, and my wife knows that I so much love the traditional, rice and beans. I don't know how it is called, but then it's a rice cooked with beans, with some, spices and some, vegetables, salads usually, lettuce rather, and groundnut oil. It's actually a recipe for people that live in this part of the country. And that was made, and my wife was now saying, this rice, how can we get all of this rice? And I told her that, well, Hajia was the one that actually made this, and I don't know how to go back to tell her that we need more of this. And alhamdulillah, that has been the situation. After a few days, he will still ask, were you able to get, to identify where and how we can get this right? And I told her, no, it's something that I cannot ask. But then this is just to tell you what Hajia has done in her own little way. But then the cup that she gave, I always make sure that I took my, morning coffee with that cup. And this is what I use up till now. Thank you so much for that, Hajia. Now, having said all of those, I would like to start by saying that we at Jaiz Bank recognize agriculture and the agribusiness generally as one of the most important components the bank looks up to in terms of supporting. And it may interest you to note that as of today, our total, contribution, or the total sectors, portfolio is about 16%. That is to say, our total bank's portfolio dedicated to agriculture is about 16%. Now, if you look at this by all standards, it's a clear indication that the bank has a very huge appetite to supporting and financing, this particular, space. My own contribution will be in misalignment with what my colleague did, Mr. Aliyu. I'm not going to make any presentation. I don't have any presentation slide for this because of the time that we have. But then I will only mention what we are doing as a bank to now, ignite the conversation, because what I think we should look at now is how do we take all of these opportunities that were mentioned by my colleague, further beyond the, the English and what have you. And I know that Hajia is a very practical person. So because of that, certainly we would be looking at, what the bank is doing and how we can actually move forward.
Hello,
talking about
Abubakar,
yes, Hajia.
since you don't have a presentation, can we see you as you speak?
Oh, sure, Haja.
You're on video, yeah. You're off the video.
Okay, maybe if you can check out the presentation so that we can have this. Yes, thank you. So as I was saying, we are trying to actually, convey to the participants what Jaiz Bank is doing as far as this space is concerned, especially taking cognizance of or narrowing down to the conversation of what the bank can do to support those that are actually into export or are willing to go into export of agricultural commodities. Now, our support to the sector cuts across the various segments of the value chain. That is to say, for all the enterprises within the agri space, we do provide support across the various components of the value chain, be it the upstream, the downstream, or the midstream. As a bank, we have over the years understood critically where the issues being faced by most players lies. And that has to do with the production component of the chain. And for us to now be able to do this, we came up with a product. And this product specifically targets the smallholder farmers, because after doing our own research, we realized that bulk of what goes into the market that is being aggregated by players, whether these players are domestic players or international players, is being injected into the market by smallholder farmers. Now, the products we designed enabled us to roll out financing in such a way that these smallholder farmers are able to access financing to the tune of even 100,000 naira, so that we will be able to at least bring these people on board the financial network. In doing this, we did a pilot test with the production of rice in Kano sometimes in 2019, 2020. And alhamdulillah, for the pilot phase, we were able to recover the bank's fund, 100% recovery. So what this tells you is that even the smallholder farmers are, if you can profile them very well, certainly you can get whatever repayment that you are expecting. Next, we now expanded the production to about 8 local governments in Kano. And as I speak with you, the repayment rate is hovering about 75–80%. And we are very hopeful that we will reach 100%, just like as we did with the pilot phase. What do we do with these smallholder farmers? These smallholder farmers are being aggregated into cooperatives. We give out the financing, they produce, and at the end of the day, we link them up with players that are actually into corporate milling, that is milling those that own integrated mills. And you now realize that it is a complete value chain financing that we are doing. We finance these smallholder farmers for them to produce. We already have a huge number of players that are into rice milling business. We link these farmers with the rice milling business, and I mean the rice millers, and they object this from the smallholder farmers. And the bank now keeps on rotating and tracking the performance of this financing. Now, this is a model that we have developed, we have tested, and we have proved that it is working. Now, for any of us here that is into the export business, the aggregation of, the aggregation of one produce or the other, if you are able to get the aggregation successfully without actually going back to the production side to start from there, fine. But you realize that sometimes for people that are into export specifically, if you can have some control over what is being produced by your farmers, it is actually good. And with this, it means we can have a partnership to see how we can finance these farmers, for these farmers to produce, for you to export from the, for you to object from these farmers, and of course, for you to now take these down to the processing side. If you're adding value, if you're processing further or whatever it is, after which you can now either sell within the domestic market or perhaps you know, sell to or export to the international market. Now, aside this, Aliyu has also mentioned that we have a couple of MSMEs that are majorly playing within the agri space, be it within the poultry, within the production, within the you know, agro processing or whatever. You have a lot of MSMEs that are playing within this space. And these are people that we really have partnered with, have financed, and are really getting the benefits of all the products that he has mentioned. Talking about the appetite once more, if you take this further into, you know, the corporates, with the corporates currently, I think we have over 6 integrated rice mills that are coming up. We have, you know, other value chains of soya, of people that are into export of sesame, export of cocoa, and what have you, that are really on board. And only recently, we have one of the millers that has actually expanded. They have a 300 capacity mill that they are operating, and they now saw the opportunities in there. They decided to replicate this and, of course, upscale the production capacity from 300 to 600. In all, they have about 900 metric tons per day capacity rice milling facility. The 600 facility is coming on board perhaps before the end of the year. But then, as you are doing this, you realize that the component of the chain that is supposed to supply the paddy, which is a production component, is now being exhausted or sort of, because you have a lot of players that are coming in within the agro-processing component, leaving behind the production component. And if you are to operate successfully, what it means is there has to be some backward integration so that at least you will be able to provide a reasonable percentage of the raw materials you need to feed the mill if you are to produce at optimum. This particular customer that I'm trying to you know, relate on was having 900 metric tons capacity, and they now had to go into their own production and acquired about 10,000 hectare you know, land, and then they are currently in the state of you know, developing this land. The clearing has started, it has gone to a far level, and then there will also be about 25 million cubic meters of you know, a dam that will support the production on this, because it is intended to be an irrigation you know, kind of financing and then kind of production. And then to support all of this, CBN actually played a major role, and about 10.9 billion naira was given to this particular customer to see that all of this is actually you know, brought on board to ensure that the production component is really getting the requisite attention. For us, therefore, if you look at what I have narrated, we don't have barriers to what we can support, whether it is micro, whether it is within the medium scale, or whether it is within the you know, the corporate scale, because we have an understanding of what is required, what needs to be done for us to actually take this you know, space to the next level. So for us that are actually in the house, this is actually a challenge for us. Are we exporters? Are we exporting already? Are we taking, thinking of going into the export business? The most important component that ensures a successful outing as far as export is concerned is the ability to aggregate the requisite you know, produce that will meet the standard of the people you are exporting to, or your customers that are asking for you to export this. That is to say, for you to have a successful export outing, you must be able to, first of all, address the issue of sourcing for the item to be exported. And in doing this, you don't discount that to just relying on the open market. While you rely on the open market, you also have plans along the way to be able to at least have control on some of the items you intend to export, so that at the end of the day, you will be able to have the best of quality of the materials that you need to actually export. Hajia was saying earlier that if you are into export, you need to have the best of quality. You don't need to add just the raw material, you need to add value to that. And I think that is very critical. It is on record that some of the people that are actually coming into Nigeria to export such stuff as ginger, sesame, hibiscus, they will export to their own countries, clean these further, package them the way they want, and then export to other, other customers that are around the world. And these are being labeled as their own country's product, not a Nigerian product. So therefore, if you look at it, it means if somebody could come into the country, buy the produce, take it to their own country, clean the product, export to their customers, and still make an earning, it means if you as a Nigerian can aggregate this, can aggregate this produce, clean them and convert them into the requisite state and take them directly to your customers, it means you can earn far more than what these people can earn. What is most important, as I have said, is actually the quality of the material you are exporting. And you don't just export the raw material. Please, let us add value to whatever that we intend to export. And we will be there to support you to see how farmers you are working with can actually produce this, how you as a customer of the bank can actually aggregate from these farmers, and how the bank can actually support you further to export this to your countries, of course, to your customers, and of course, meeting the requisite, specifications of those customers. Somebody asked a question regarding warehousing. And if you are exporting, one key important thing that you should have as as an asset is for you to have the warehouse to stock these, so that either on lease or your own warehouse, so that you can actually leverage on that to aggregate whatever that is required for you to aggregate. For those of us that are exporting with LC in place, certainly we do provide financing against the LC that will be established by your customers. And in this regard, we will support you to aggregate the requisite quantity of commodities that is required in line with the LC or in line with the supply order that you have, so that you first of all aggregate this, after which we now think about cleaning this or converting them to the requisite state that your customers require. And in doing this, you can have direct financing from the bank. And if the scale is so much, we also have partners. We also have a financing that is actually an FX denominated financing that we can actually deploy for you to be able to meet up with the scale that you intend to, or with the scale the customers actually require you to do, so that you will be able to export. And because the inflow will be in the dollar denominator, certainly you will now use that or apply that in meeting the financial obligation. So that is what I will say as far as this discussion is concerned. And in conclusion, I would like to say that as a bank, we can deal with all class of customers, regardless of where they play to, whether they are within the production component, within the agro-processing, within the aggregation component, or within the export component. All of this we can actually support. We can also support exporters, for example, or local aggregators that are into backward integration of having their own farmers to produce what they intend to now export or to use locally in their own facility in-house, so that at the end of the day, they would have a chunk of the percentage of the raw materials that will require within their processing facility. And then again, for those that are into export, for example, in a situation where you have your LC, where you have your supply orders, and you are unable to meet the requirement of your customers, as a bank, we will step in to support you to aggregate for you to export. If what we have is not enough, we have an FX denominated facility that we can as well deploy for you to be able to access and for you to be able to as well process into the requisite state of the commodity or the produce for you to also export. I think I would pause here for us to take the conversation further, for us to answer as much question as you may have. And with this, I would like to say thank you, and thank you once more, Hajia, for having this in place.
Thank you so much, Abubakar. That was excellent. I know I've been saying it's excellent, but it really is. Everything you said here really, really is something that everybody's talking about, thinking about now. As we all know, the government is trying to diversify the economy. We have something called the Zero Oil Plan, and that is a plan that essentially is going to encourage and support, provide incentives for Nigerian agri-entrepreneurs to go into export production and as well reduce imports of food. I don't know if you're aware that we import almost everything we consume. And of course that affects the value of the Naira. It affects our foreign reserves. Our economy generally is so dependent on imports that it is extremely difficult for the economy to grow. So aside from exports, we also have to try and reduce imports. So this is a huge opportunity. And I hope that we will try and have as many awareness sessions in order to open all the people there, especially young people. I'd just like to say that I'm actually currently engaging on a PhD, and my PhD has to do with Nigeria's engagement with the World Trade Organization. Now, I don't know if you're all aware that Africa only contributes to 2% of global trade, 2%. So we are not trading enough. We're not trading between ourselves. We're not trading with the world. It's a one-way thing, meaning that the world is just sending things to us, or we're just a dumping ground, if you like. So we need to create this awareness, and this affects the economy. The sooner we start to focus on producing and consuming, or producing what we consume, the better the economy is going to fare. Government can only do so much. Government cannot be the trader, cannot be the business person. Government can only provide an enabling environment for business people to take up the opportunity and do what it takes. So this is what we read, the message, number one. The second thing is the Jaiz Bank non-interest window, which we've just been told about, is very unique. And it's also something that is so rational, and it's safer, because I know how many people go into interest banking, and before you know it, the interest is even more than the actual capital. And at the end of the day, it can completely destroy or bankrupt a business person. And so this is something that makes so much sense. Nothing to do with religion, just call it non-interest banking or non-interest finance. It's not to do with religion at all. It's just a very rational way of a safe borrowing, something that you know that you will not lose out completely, end up with AMCON, because interest rates have become so astronomical. So this is a very important thing. I think Abubakar and Aliyu, the time that we've had with you has been so valuable. We literally have 1 hour, well, 1 minute. Okay, we don't even have 1 minute. It's already 1 o'clock. We have to round up now. I think that from this session, we can continue to develop and have more of these type of webinars, so we can go even deeper. Because I think for Agri, that is Abubakar McIntyre's session, we only touched on the surface. We've not gone far. Like you said, there's all the issues of warehousing to discuss. This issue of real practical things is what we want. So I'm hoping that Abubakar, we can call you again to just have a pure session on Agri. Now that we all know what Jaiz is, or we all have an idea of what Islamic banking is about, now we can go into the Agri, go deeper. So I'm afraid it's 1 o'clock. We will not even be able to answer questions, but one thing is that we will send you this presentation that Aliu's presented, number one. Number two, please register as a member and go into the deal room as well. We have our email. Please send emails. We will do our best to either link you up. For instance, Jaiz Bank, their doors are open. You don't have to go through iProduce. You can directly go to Jaiz Bank, use that presentation. If you have questions, just go into the branch and say, look, I know you do this. Tell me more about it. I think that would be a very easy way for people to get their questions answered rather than doing it on this platform. So this is just to open the doors and to let you know this is available. I think on this note, 1 minute past 1, we have to round up, and I want to say a big thank you to Abubakar, to Aliu for taking the time to give us such a deep insight into both Islamic banking and also what you do. And we have the development bank funds, for instance, which 5 billion is being expected. This is something new. You have the 100 by 100, which is 100 every month or something. Those are kind of things that are really music to our ears. So yeah, please go ahead and develop yourselves, and you'll hear from us again. We will have more of these sessions. Thank you so much. And Habib, our administrator, thank you so much. Farida, who is always there, she's the program manager. Thank you. And everybody, all the participants, appreciate you for having taken 2 hours of your time. I know it's a lot data as well. So we look forward to more sessions and more interaction with you. Thank you very much. Bye.
Thank you very much, Hajia.
Thank you, Hajia.
Thank you.